Let's take a look at some information and charts on Avalanche for Brave New Coin. Continuing the theme today of Josh talking about things he knows very little about. Let's dig a little deeper together into Avalanche. Blazing fast, low cost, eco-friendly. So that means it's probably proof of stake right off the bat. Validators, proof of stake. Okay, cool. Again, what's the consensus mechanism? When did they do the raise? Who has a bunch of coin? When can they sell? What is the locking mechanism? How many people are locked up currently? These are all the basic questions you need to ask when you're just giving an initial pass into something. Then you can look at things like TVL, how easy it is to use. Is it a bridge? Is it middleware? What is it, right? So Avax is the coin on Avalanche and currently available on a bunch of exchanges, even though I heard about it probably a few months ago, hearing a ton about it over the past couple days, obviously. Everybody and their mother seems to be piling into this thing. 56% staked. Cool, good. 1.5 billion in volume, which is massive with an 8 billion market cap. Looks like they have a burning mechanism as well, similar to EIP 1559. Great. That's going to be bullish for things along with staking. So this is kind of like the ETH playbook pre-proof of stake for ETH. And they did a private raise as well as a public token sale mid last year. Did a raise early 2019. So they've done some funding. This is how it's split between everybody. I don't know the exact lockup schedule, but it looks like they have a liquid supply curve that unlocks slowly over time. And by, let's say, 2024, it looks like most of the supply will be unlocked. I think it was, what was it? 360 million. Okay. Total. Eventually. Currently it's around 173 million, according to Brave New Coin, free float. And half of that, 60%, 55 to 60% is locked up. So there's not a lot of float available, which is always bullish for anything when all of a sudden a bunch of people FOMO into it, right? Half the supply is not even circulating, and then half of that supply is not even circulating. So not a lot of coins floating around. Here's their consensus mechanism. I'm not going to go over it, but it's similar to BFT. They call it leaderless BFT, Snowman consensus. I don't know. You can read about it on their documentation should you be interested. But they go in and break down why it's cheaper, better, faster, stronger than everybody else. And ultimately, none of this stuff matters until it's actually attacked. You can say one thing, but until there's some issue and it becomes anti-fragile, right? So I'm not saying I don't believe them, but I'm saying this stuff is less relevant, on paper, and it's all about action when it happens, when the network goes down, or if the network goes down, if the network gets attacked, that sort of thing. As the TVL grows, the honeypot gets bigger and sweeter and attracts more wasps and evil, nefarious people looking to take that TVL. So just keep that in mind. High risk type stuff we're talking about here regardless. And it looks like each validator needs 2,000 Avax, so similar to a masternode type situation where that has a positive effect on price if more and more people become validators, because that'll soak up supply. If you're soaking up supply, that's likely bullish for price. They also have 3 different chains, which I'm not going to go into. P chain, C chain, something else. It's kind of confusing. Here's some more validator metrics. Staking rewards 10% per year. That's not notional. That's in Avax, which is important to note. 1,000 validators, over 1,000 validators. And then here are the staking metrics, which don't agree with the Brave New Coin metrics. This is why it's always confusing. How much did we mint? How much is staking? What is the percentage of that? Is that counted as circulating or not? That's always like the confusing part of this. One big thing is they don't do slashing. I'm not going to explain what that is, but they don't do it. Staking rewards, 11%. I already mentioned that, ish, 10 to 11%. So a lot of the networks being staked. Some of the networks not even available yet. It's vested out still. Looks like most of the nodes are updated to the latest versions, which is good. I don't know, because these are somewhat anonymous by the looks of it. I don't know how many of these are exchanges. I don't know how many of these are in Asia. I don't know how many of these are venture capital. Always important things to look at when you're trying to determine centralization of a network. You'd think the validators would be public, but maybe there's a reason they're not in this case, or maybe they are and I just am not seeing it on this specific website. But you probably want to know who these people are. You know, how many of these are Avalanche themselves, how many of these are Binance type thing, right? That's important to know. They also have a roadmap and had a roadmap, continually hitting milestones. Testnet in April 2020, mainnet was September 2020. Here are the 3 chains, P, X, and C. EVM compatibility, contract chain, C chain. So that happened in September 2020. The current roadmap is also on their website. They break down what they're doing and when, what they're hoping to hit, certain milestones, projects, things they're looking to do. This is all good. I love this for any project. Whether or not they hit these milestones, I don't know, but they have various EIPs that they're implementing as well. So they're kind of stealing the thunder there and kind of subsidizing, or ETH is subsidizing their development, which is always interesting. So you can check that out if you are curious on where that chain is headed. And you can connect this to MetaMask. This is Pangolin, one of the biggest dexes, or the biggest dex on Avax. And one of the strengths of anything right now is interoperability for ETH. And again, if they can, like, not vampire attack, but subsidize the knowledge of MetaMask and get connected to MetaMask, that automatically gives them a leg up on anybody else who's not, right? So bullish that for sure, because that just brings a bunch of money immediately into Avalanche quickly and easily. Now, there's a great thread by Coastal Degen kind of breaking down all the different stuff that's happened over the past 6 months, all the different DeFi type things that are going on. Pangolin, Joe, Yak, all this stuff. Maybe you've heard of it, maybe you haven't, I don't know. But pretty good thread here if you want to check him out on Twitter, sort of explaining, breaking down each individual thing here. For me, it's more important to just look at broad TVL right now and see what's happening. So there's clearly a mining liquidity incentive here, or APY incentives, similar to Luna, bringing people on board, right? They're subsidizing attention for people, their prices going up. This is bringing eyeballs as well. Just this liquidity begets liquidity adage in effect here. So they're subsidizing people to come, and then more people are coming because prices are going up. And it's easy to get there because it's on MetaMask, right? So all this stuff is just easy to do. Very similar to BSC situation where fees are cheaper than ETH. It's easy to do. APYs are super high, very high risk. Probably not as centralized as BSC, but definitely has the feelings, the FOMO going on with it. I already mentioned Pangolin, but you can see the TVL increasing here rapidly, the volume just exploding with those mining incentives, bunch of tokens here, mostly Avalanche specific type stuff, and the usual suspects, Tether, DAI, ETH, wrapped Avax, that sort of thing. The yield farming stuff, APY is insane as well. There's a compounding component here that's easy and cheap to do relative to what you can do on ETH. So the grass is definitely greener for many people on this stuff than ETH. And I think that's why stuff like Luna and Avax are popping off right now. You've got NFT mania, and you've got these cheap chains where you can do stuff and get a bunch of APY rather quickly, right? High risk, but easy to do. Moving on to technicals, this is the Binance on the daily, and it got listed shortly after mainnet launched, or shortly before mainnet launched, and price kind of just held flat for a couple months, got demolished, probably some unlock or something here. I don't know exactly what happened, but then it had this just slow bleed, kind of triple bottom type of thing, and then took off with everything in January. Not really on my radar, like I said, until a couple weeks ago, but the fact that this looks like DeFi in that it moved throughout January, declined big in May 18, triple bottomed recently, and then lifted off again, to me says that people view this as a DeFi chain if it's grouped in with all of DeFi. So where we sit now, RSI is basically at infinity and just kind of pinned at infinity. So I'd be careful with anything up here, way past monthly R5s, approaching all-time highs. As soon as those liquidity mining incentives dry up, as soon as those APYs dry up, I expect this thing to come down pretty substantially. The 200-day moving average is currently at 20. So keep that in mind. Over a 50% drop from here. 30 looks okay. 25 looks okay. If you're looking to get into something like this, I guess. But based on VPVR and monthly pivots, decent volume spike here in Binance over the past couple of days relative to where it was. And on the 12-hour, kind of zoomed in a little bit, you can see that triple bottom a little better, volume a little better, RSI exploded, right? You had this rising wedge that just popped up as all of a sudden the FOMO money rolled in, right? Here's that 33 level again on the 12-hour. So also got to say, if you're trading this stuff, be careful. Technicals are very clearly overbought. Now they can stay overbought for weeks, but the longer they're overbought, the higher the probability this thing eventually retraces a little bit. At least the cloud likes 28, 27 on the daily, and on the 12-hour, it likes 33. Again, there's that level. If you were paying attention to this, that's half the battle. Like in January, this was the 12-hour breakout. Most recently, this was the 12-hour breakout at 15. It's less about where this goes and more about just the entry signals, right? Like, because this didn't explode here, but the conditions were adequate. End of 2020, end of July, where you get some sort of extended bear market reversal flipping into just absolute mania. Now, previously this did have 2 runs up, so it's possible that happens again. DeFi has had a good run so far, so it may be up to the rest of the ecosystem now to bring this thing higher to another leg. You know, unless some sort of mining liquidity incentives get unlocked again, I don't know, right? But something that could bring this higher is if all of DeFi just has a crazy leg up, right? Because Avax is in that group at this point. I just don't know to what extent this thing is going to outperform everything else because it's already way ahead of many ETH DeFi projects at the moment, price-wise, at least since August, right? Lots of ETH DeFi is not at all-time highs retesting those levels. So if this thing does pull back, which I expect it to, I like 33 or lower. The 4-hour cloud is also something I'd watch. TKC clamp here, which is telling you this is overbought in case you weren't already sure. Since the breakout, it's just been above the Kijun, above the cloud on the 4-hour. So I'd watch that 35 level here. If this thing starts to roll over below the cloud, below the Kijun, then for me, that would be a sign that this is going to relax for quite a while, or at least over the next couple weeks, probably into September. There's probably a bear div on this as well on RSI. Against BTC on the 12-hour, the chart's rather comical. Just a crazy range. Did have a triple bottom. You know, I don't know how much more this has in it relative to BTC. If you've traded this chart successfully, congratulations. Yeah, I don't know. I don't really have any words for this. It's just kind of all in or not. Very bullish or very bearish very quickly. So just be careful. All the moving averages and volume are much lower at this point. So keep that in mind. And then against ETH, kind of equally manic, months and months and months of nothing versus just explosions. So I definitely watch liquidity mining incentives. I'd watch TVL. I'd watch for any hacks, exploit news. You know, I don't expect that to happen. I don't expect the network to just shut down or anything like that. But when a bunch of attention and money gets placed in these newer projects like Luna or Avax or wherever, any of these newer DeFi smart contracts, inevitably there's going to be some issue somewhere. So I'd watch for that. I'd be careful with that. As long as you're okay with the risk, go for it. Not investment advice, just something to keep in mind. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital and Enzyme.finance, where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocations, all the coins I'm in, all the yield stuff I'm playing, all the trades I make in the bottom tab here. And I'm currently mostly in stablecoins on the ETH-BTC fund and mostly in DeFi on the DeFi fund. I think ETH and BTC probably cool off a little bit here and give me better entries relative to current price. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.